The free market is a fiction. It's a fairy tale. It's a story that people tell themselves because capitalism is not free markets. No. It's not even really markets. Markets existed before capitalism and they'll exist after capitalism.
Yeah.
What capitalism really is the private ownership of the means of production. And it is predicated on the accumulation of capital or surplus value. Yeah. That is what capitalism is. And so people have been bought into this notion that the free market is like this thing that we should sort of prize at all costs. But we don't really have a free market. And the way that we know that is the real deep connections between huge corporations and the government.
Yeah.
So she talks a lot about in the book about really two particular crises that happened within living memory within the last 20 years that really highlight that connection between the corporations and the state. The first is the 2008 financial crisis, which, some people couldn't see coming. Most people couldn't see coming, but some people did. And specifically an economist named Nouriel Roubini, who wrote another really great book called Crisis Economics, and he laid out, he's like, yes, this is bound to fall apart. Now, why did the financial crisis happen? It happened for a variety of reasons, but the main one was it was tied to financialization. In the 1930s, under the New Deal, there was a key piece of banking legislation called the Glass-Steagall Act.
Right.
And the Glass-Steagall Act separated commercial banks from investment banks. So if you wanted to, commercial bank is your regular everyday bank. You go in, you have your checking account, your savings account. You may have a CD. You might have some T-bonds. You go in, that's where you get your mortgage. That's where you get your car bill, whatever, car note, whatever. And then there's investment banks, and investment banks are extremely risky and volatile. They kind of play a lot more fast and loose with money. And when Glass-Steagall was repealed in 1999, the investment and commercial banks were sort of melded all into one another. And so you had a company like AIG, the American Investment Group, they were taking on more and more financial liabilities that they couldn't really handle. And ultimately, the firm failed and had to be bailed out by the government. And this is a very key feature of neoliberalism, which is that corporations are really three things. They're too big to fail, and that if you let them fail, the whole system falls with it. Right. It hurts a lot of people. They're too big to jail, in that these people almost never see any kind of prosecution for what they do.